Welcome to the Bound to be Rich podcast, where I attempt to reverse engineer people who seem to be successful no matter the circumstances so that you can apply those lessons to your own life. I'm your host, Ismail Hamed. In this episode, we are joined by Alex the Machine Mashinsky, founder and CEO of Celsius. I don't think I've said this yet in the podcast, but you are not going to want to miss this one. You can also watch the video version on YouTube, and I'll have the link in the show notes. Alex has had a legendary career and is one of the few entrepreneurs in history to have founded multiple billion-dollar companies. He's most known as the inventor of VoIP, voice over internet. It's because of him, basically, that we're able to speak to anyone in the world for free over the internet. Obviously, the global telecom companies all hate him. He then started Groundlink, which was essentially Uber years before Uber was started. And he holds over 50 patents that cover aspects of Groupon, Twitter, Skype, the App Store, the Netflix streaming concept, the list goes on. He's even responsible for bringing cell phone service to the underground New York City subway system. The man has done it all. Alex is currently focused on bringing 100 million people onto the Celsius platform and into the world of crypto. And they're doing a pretty good job so far. There's currently over $18 billion in crypto assets on Celsius. Now the big banks hate him too, because Celsius provides people with passive income in the form of very high interest just for storing their funds in the Celsius wallet. Celsius also allows you to borrow cash against your crypto so that you never have to sell your coins, which of course is one way to avoid having to pay capital gains taxes. I couldn't wait to have this conversation, and now I'm super excited to be able to share it with you. Let's dive in. Alex, thanks so much for coming on the show, man. Really, really appreciate it.
Thanks for having me.
So, I share in your vision of bringing regular people to crypto. I think your current vision is to bring 100 million people to Celsius. So I want this conversation to help put a dent into that, hopefully. If we can bring a few hundred people or a couple thousand people onto Celsius, I'd be happy. But before we get into that, I'd like to set the stage and get people to know you a little bit more, because when I read the introduction, you sound like it's very unrelatable. This guy just hits home run after home run. He does all these big things. So if you don't mind, I've got a ton of questions that I know I'm not going to get to, but I'd like to start with something I'm curious about. So I read that you were born in the Ukraine, right? And my family is also from Eastern Europe, from Macedonia. So I go there often, the former Yugoslavia, and I have a lot of friends and family there, and I speak to them. And one thing that always stands out to me is that how lucky we are to grow up in America, where we believe we can do anything. Because a lot of my friends and family, they don't have that optimism. Their hope is to get out of the country, to go to America, to go to Europe. So I really want to hear how someone like you who came out of there, this is years ago, before the internet, how did you not fall into that mindset? And how did you believe that, hey, I can do something?
Yeah, sure. So, I mean, I'm not sure that the United States is as that still viewed as that house at the top of the hill that we all aspire to come to. I think it used to be that you had an American passport and you can basically go anywhere and do anything. Now I think a Canadian passport is better. But definitely growing up in the Ukraine, and then my parents immigrated to Israel when I was 7. So growing up in Israel, it looked like people in the United States just have a much better life, and if you're going to get stuck in Ukraine or Israel or Serbia or whatever, Macedonia, whatever the country you're in, you're just not going to have the same opportunities. It's definitely the United States of America is definitely a place where you can achieve more than your aspirations, right? You can kind of exceed your own expectations, but it's also a very difficult place. There's no safety net, right? So there's no if things don't work out, there's no one who really cares about you, right? You don't have your family, you don't have, no one has time for friendship, so it's a little bit different. There are sacrifices. It's not just all good.
What about you made you different growing up there, where you didn't fall into that mindset of, hey, we can't do anything, it is what it is? What made you think, I'm going to go to America and I can do something?
So it's a long story, but basically, when I was trying to be an entrepreneur in Israel, that was before Israel was a startup nation, right? And I didn't have any degrees. I didn't come from a wealthy family or had any capital, and just no one wanted to listen to anything I had to say. So I actually was doing international trade, and I flew to Europe to try to. I was in Paris trying to close a deal that I was working on, and it was just cheaper to get a ticket to New York with a stop in Paris. Air France gave you basically a lower rate going to New York through Paris than flying direct. So I had that stub to come to the United States. I never. It wasn't like, okay, I'm just gonna go to the U.S. and I'm gonna stay there. I had that ticket. I was like, look, what could go wrong? Let me just go figure it out. Worst case, I always have the return ticket, and if things don't work out, I'm just going to come back. And I knew one person in New Jersey that. So I reached out to him and I said, hey, I'm gonna fly in. Can we meet? Can you come? He's like, oh, I'm gonna pick you up. And then he never showed up. So I took the bus to 42nd Street, and that was like my introduction to New York.
It's funny because a lot of my family friends immigrated to America with the same plan. Like, they just wanted to come to America, work enough to have enough money to buy a tractor, and then go back home, and they never left. So
right. So it's definitely, what's amazing in America, especially after working in Europe, is that when I went, and again, I came here as a 21-year-old, and I went and told people my vision for, the internet. I mean, back then it wasn't the internet, it was information superhighway back in the late 80s. And they looked at me like, what are you talking about? You're not AT&T. You're not 9X. Back then it was 9X, Bell Atlantic, and all these companies. How are you going to get anything done? I'm like, you don't understand. Everybody's going to have internet. And they looked at me like, what are you talking about? You mean phone lines? I'm like, no, internet. So what's amazing is that in Europe, like I was in France, I was using Minitel, which was their version of the internet. And it was already basically in every home, right? And so it was easy to see that vision come to life with the search engine and everything. And it was non-existent in the United States of America, right? So everything was BBS's, dial-up, and so on. So a lot of it also has to do with being at the right place at the right time, right? So, but people basically heard my ideas. They invested in my company, and I built Voice over IP. And, I definitely could not have done that in Europe.
Right. Like you said, things may have changed now a little bit, but at that time, I think America was the North Star for entrepreneurs. I also read somewhere something about your father was also like a tinkerer, and maybe that. Can you tell me a little bit about your father, and did any of that rub off on you? It seems like it did.
Yeah, my dad and my grandfather were both refuseniks, meaning they thought that Jews should immigrate to Israel, and they felt that they wanted to leave the state, the Communist Party, which was a big no-no. I mean, so basically they lost their job. They were refusenik means refused exit, right? They were not allowed to do anything because they were not part of the Communist Party. And we were lucky that in 1972 the Americans, actually Armand Hammer and a bunch of other politicians, brokered a deal. Russia was struggling with food and they had a horrible harvest, so they shipped 300,000 metric tons of wheat to feed the Russian masses, And in exchange, the Russians agreed to release 300,000 Jews to basically leave Russia, right? So we were in that outflux, and so people, it's funny because when people say to me, why'd you come to America? I'm like, well, I owe 4 metric tons of wheat that the United States paid for me in 1972, and with inflation and interest, compounding interest, I'm going to have to work a long time to pay that back. But basically, while many people who left came to the United States, went to Brooklyn and Miami and wherever, my family was adamant about the fact that we have to immigrate to Israel. And 3 months later, the Yom Kippur War started. So my mother was like screaming at my dad, you took us out of Russia and you brought us here. They're like, we're going to lose this war. It's going to be the end of us, because the Arabs were winning. The first few weeks, it looked like the end was near. So
it's a crazy story. If you look at it in a certain way, where you kind of were traded for wheat, but then you end up adding so much value to society. Like you end up putting a little dent into the universe, right? So this is the stuff that I like to talk about, because everyone looks at all these big entrepreneurs and they're like, wow, they look unrelatable. I can never be like them. But they all start somewhere, right? So was there anything else that you did in the beginning? I read about flipping items from customs, or some other things that you were doing in the early days.
Well, I grew up in this in the Ukraine, the tiny little town called Chernovtsi, or it used to be Romania, then it became Ukraine, but it used to be called Chernauts, and we had an outhouse. I mean, we had this tiny little decrepit house made out of like cobbled together wood and metal plaques, and there was an outhouse. And I remember like asking myself, why do I have to, in the middle of the winter, leave the house and go up the hill into the outhouse to use the bathroom? It's like, couldn't somebody think about putting the bathroom in the house? I didn't even think that that was my existence. My life was about, I loved the snow. I was like riding my sled and my whatever, riding, but definitely was very humble beginnings. So, and like you said, I mean, a lot of it has to do with imagining a different future, right? Imagining how you can make things better for yourself, for your family, for others, and pursuing that dream, right? So in the United States, pursuing your dream is almost like a God-given right, like everybody's like taking it for granted. But I always say to Americans who've never left the United States that they must travel overseas and see how difficult it is for others, how great we have it here that we just take it for granted.
I totally agree. I actually really relate to that story. When I visited Macedonia, same thing, an outhouse, and people in America don't realize this. Like, this wasn't that long ago where it wasn't even a toilet. It's like a hole in the ground, and you have to go outside the home to use the bathroom. Thankfully, that was when I was younger. I think recently they've all kind of modernized, at least from what I've seen. So thankfully that's happened.
It's still an outhouse, but now there's a toilet instead of just a hole in the ground. Yeah,
We're making progress. What about, I also heard that you tried day trading. Is that true?
Yeah, so I tried many different things. I think one of the important things about kind of figuring out who you are, what you're good at, is trying different things. So in the 90s, I did some commodity trading, then I did some stock trading, and
we have a lot of traders listening to this. Some of my most popular episodes were with traders that made a ton of money recently, like these young kids. Do you have any advice for them? The crypto traders, option traders, all of them are listening. So what would you say?
Well, and the best advice is that when you're making money, don't get confused with being in a good market with you being a super good trader. Which means that what happens is that you get so much confidence that every trade you make is great, or 9 out of 10 you win, that when the market turns, you continue to take the same bets or similar bets, and you start losing, and you don't realize that the market has turned. You just think to yourself that you can continue to do what you do, and that's like you get into a bear trap, or you get into all kind of other things that really make you lose a lot of money. So unless you're a world pro at picking trends and knowing ahead of others when markets will turn, and very, very few people do that very well, you're going to end up losing money in the long run. So don't get confused between a bull market and you being a genius.
Great advice. So before we jump into the crypto, I just want to touch on, you also had the idea for Uber way before Uber came around. And I remember reading somewhere that it was difficult to see them succeed. So I have a very small example of that, very small compared to yours, but I had this idea for a gym in my town. It was a perfect location. I researched it, and I didn't end up doing it. And lo and behold, somebody else opened a gym. And I have to drive by this every day. They bought the place next door. They expanded. It's a huge success. And it was very painful for me to drive by and see that and say, hey, that was my idea. So my takeaway was, like, whenever I have an idea, trust my intuition and just go for it, right? If you fail, no big deal, keep going. What did you take away from the Uber experience and seeing them succeed? Is there anything that you took away from that you carry with you?
Yeah, so look, in life, timing is everything. If you're too early, it's just as bad as being too late. And here we were just too early. I mean, I founded GroundLink in 2003, and when Uber was just getting started in San Francisco, we were in 5,000 airports all over the world, right? So we had, I don't know, I think it was like 40 or $50 million in transactions and thousands of cars, and everything was going great. And the 2008 recession, Uber started right after the recession. So they grew kind of slowly and then fast, subsidizing rides for their riders, right? And because we started before the recession, we were a profitable company and we wanted to stay profitable, and we didn't want to subsidize the rides. We were not in the business of giving everybody a 50% discount, but the idea was the right idea, right? That basically on-demand transportation available instantly. So we were the first app in the App Store that offered that on-demand service, right? So basically, Uber copied everything we had, but they had $16 billion worth of subsidies that they gave their customers, and we didn't have that. So having the best idea doesn't mean you win. And even if you have the idea first and you get the capital, doesn't mean you win, because if your timing is wrong and you burn through all that capital because of a recession or because of whatever else, you kind of spent your bullets, and other people are just getting started, so they can actually get ahead of you, or they can learn from your mistakes and start where you already are, where they didn't spend all that money, right? They don't have the arrows in their back for being trailblazers. So we were definitely, also we chose the wrong investors. We had private equity, and they definitely had zero interest in subsidized. They're not VCs, right? Uber had VCs who were willing to burn billions of dollars and just gain market share. And our investors were not willing to do that. They told me, I remember like today in 2010, they were like, we don't have to worry about these guys. They're going to go out of business, giving all these discounts to their customers. I'm like, no, but what if they keep raising money? No one's going to give them billions of dollars to burn on customers. So I left my own company in 2011, which was very painful. It wasn't easy to leave your creation because I knew it was doomed. And I remember it like today. My wife told me, you should just go and work for Uber. I mean, they need you. They'll let you run New York or the, Northeast. And I was like, I'm never going to go and work for my competitors, So obviously, in retrospect, I probably should have listened to her. But it was very painful going through that transition because, again, you could see them just copying things, everything we did, things that took us years to develop. They were just like, oh, that's a good idea. Let's just copy that, right? And so definitely one of those times where being too early didn't help.
It's an interesting I think we'll come back to that theme later when we talk about Bitcoin, because I know you have similar thoughts about Bitcoin in the crypto world. But I'd like to talk about crypto next, because I saw this famous video of you in New York City talking to regular people on the street and trying to get them to buy crypto or get them into crypto. So that's where I want this podcast to do, right? So how would you explain, and by the way, just to set this up, I actually requested a lot of questions from people in the Celsius network on Reddit, Facebook, Twitter. I got a ton of questions, but they were more from people that are already in the ecosystem. They're very specific to like features of Celsius. So I'm going a different way with this conversation. I want to pull new people into Celsius. So let's say you have people listening now, the white collars, the blue collars, that kind of have heard about crypto, they don't fully understand it. How would you explain crypto to a regular person, and why should they have it?
Sure, it's actually not that difficult, right? Historically, when you made something and you sold it, you got a gold coin or you got a paper note, and you knew that the value was either in the coin, right? I mean, it was made out of a precious metal, or the note was backed by gold or backed by some other asset that you knew had a good standing. And basically the world, not just the United States, but the world has gone mad. And since 1971, when the United States went off the gold standard, all the other countries that were tethered to the dollar as the reserve currency also went off the gold standard. So we created these fiat currencies or free-floating currencies that have nothing behind them. And when you ask most people what is money made of, or how money is made, they'll still talk to you about Fort Knox, and they'll talk to you about some other stuff. And so nobody really knows. And if you watch those videos of Richard Nixon talking about getting off the gold standard, he says, "We will temporarily get off." I instructed the head of the Treasury to temporarily go off the gold standard. So we are running an experiment since 1971, which is called the modern monetary theory, MMT. And it's just a crazy experiment. The idea is that we can print as much money as we want in an unlimited fashion, and nothing bad will ever happen. So history has about 700 fiat currencies that we can learn from, that all effectively either ended up in zero, worth zero, or lost 99, up between 90 and 99% of their value. Even the dollar already lost 95% of its value since 1971. So that is the kind of the foundation that most people have to understand, that every day when you get paid, every day somebody comes and clips a tiny little piece of your dollar, and it's worth less and less and less every day. So the context is not, is crypto good or bad? Is it a good investment or whatever? The context is that we, the citizens of the world, and especially the citizens of the United States, don't have a choice. No one asked us if our tax dollars should be put into savings, if our government should be frugal. Every government basically comes and spends as much as they can to try to win favor with their electorate. And unfortunately, our children and grandchildren are the one who are going to have to pay the tab for all of this. So Satoshi Nakamoto, who's the inventor of blockchain, of the Bitcoin, sorry, not the blockchain. The blockchain existed since the early 90s. Invented or put together, it's like Lego pieces. He put together, or she put together, a bunch of things that other people already created, like the blockchain, and basically added one more ingredient. It's like taking the best soup that exists and adding one ingredient, and magically suddenly everybody wants to have that soup, right? It becomes like the standard for everybody else, right? And that ingredient, additional ingredient, was the proof of work, right? So the idea that if you gave a separate group an incentive to keep the blockchain safe and create blocks in a way that is safe and secure, and you had limited supply. The most important thing is limited supply. you can create an alternative and a replacement to the financial system. You can actually create everything that exists in the financial system on the blockchain, and that system will not need intermediaries. It will not need the banks and the financial institutions that we all rely on every day. So that's really the kind of like the foundation of Bitcoin, right? Is the idea that you can create the internet, the money that runs on the internet. I call it MOIP, or money over IP. Just like VoIP or voice over IP, you can create MOIP and 7.8 billion people can use it, and they can detach themselves or separate themselves from this MMT system that is going to be the undoing of all of us.
I totally agree with everything and how you laid it out. One of my most popular episodes was one about titled "Cash is Trash," where I dive deeper into stuff like this. So if anyone's interested, they can see that in the show notes. Where, like, even my own mother talks about, I have to keep working so I can put my years in to get my pension because I'm going to get this dollar amount, right?
Right.
But it's a fixed dollar amount. So by the time you get that number, it'll be worthless, like you were kind of saying, worth less, not worthless. So people planning to live on this income that they're getting in the future, even if it's Social Security, you may not get all of it. And even if you do, it may not be worth what you think it's worth. So it's a big problem for future generations. But I also heard that you were skeptical the first time you came across the white paper or Bitcoin or crypto. So I'm just curious, for someone like you who's known for being like way ahead of trends in all these different fields, why do you think you missed it at first, and what changed that for you to get it?
Yeah, so I worked myself on a version, a MOIP version of money, right? So in 2003, 2004, I had a startup that tried to attach money to email and be able to send basically email to, so you can send somebody an email, attach $20 or $50 or whatever, and they effectively could cash it out, right? It wasn't decentralized, it wasn't blockchain based, but I was working on a version of basically electronic money, right? Or money over the internet. So it's not like I didn't know anything. Like, so when one of my employees sent me the paper and said, I posted that on Twitter actually not too long ago. I posted on Twitter the original email from, I think it was 2009. And my answer to him was, this is the world's slowest database, which is true. Bitcoin is the world's slowest database. It is a colossal waste of electricity, which is true. It's a colossal waste of electricity. And it consumes so much computing power and communications that it's the most inefficient way to create consensus, right? So I was right about everything I just said, but I was totally wrong about how important that is, like the solving the ability to effectively do a peer-to-peer transfer of value outside of the traditional banking system. So I didn't pay any attention to it until Mt. Gox. After Mt. Gox, which was I think 2013, when I saw that Bitcoin just continued walking like nothing happened, like basically like people just dusted off Mt. Gox and continued walking, I said, wait a second, I'm missing something really, really big here, because it should have died instantly. Like it should have just died, and we should have never heard about it before. And yet here it is, picking up speed and accelerating, and I had to reprogram my brain, because my entire upbringing was all about how do you take the latest technology, make stuff run faster, cheaper, and better. And this was the opposite of all that stuff, right? It wasn't the latest technology. Again, the blockchain was invented in the 90s. So we took really old stuff, dusted it off, and put it in a very, very inefficient structure. So it was very hard for my brain, which is kind of honed in on innovation and speed and everything else, to understand the proof of work and consensus and the peer-to-peer.
It sounds like you're putting a lot of value in the proof of work. Like that's the Trojan horse. That's the value here. So what is everyone else now, whether it's Elon Musk criticizing the energy waste or even Ethereum moving to a proof of stake system? What are they missing? Why are they wrong?
Well, look, a lot of those people are just trying to fix their PR mistakes. So Elon is talking about all this stuff because I don't think he knew enough about proof of stake versus proof of work or consensus or whatever, because his two favorite children was Bitcoin and Dogecoin, right? So which both are proof of work. So it's not like he jumped into Ethereum and then he said, okay, Ethereum is moving to proof of stake, so I'm no longer supporting Bitcoin, right? So I don't think it's not that they're missing something, right? I think what most people don't understand is that the power that comes from this distributed computing platform, that the Bitcoin network is the world's largest supercomputer. It's actually 1,000 times more powerful than the 100 largest supercomputers put together. So if you take all the NSA computers and all the Russian computers and all the Chinese government computers, you put all them together, plus the next 50 computers, put them all together, it will be 1/1000th the hash power of what Bitcoin is. That's how powerful. So Bitcoin is already the Bitcoin network is by far the world's most powerful computer. So we're already there. Now that network consumes tremendous amount of electricity, and more than the country of Argentina or the state of New York, the whole state, not the city of New York, the whole state of New York. So obviously there's a lot of concerns about the need for so much hash power to secure the network. And there's no going back here. It's not like you can suddenly start reducing the hash power and say, okay, let's only run 50% or 30% or whatever. The hash power is increasing every year, and the amount of computing that is necessary is increasing even faster because the ASICs and the miners are running better and better. They're more and more efficient, but they also consume more power. So the conundrum that we have is that by far the safest network is Bitcoin. The Bitcoin chain is much safer than Ethereum. It's not like, okay, Ethereum is a little bit less safe. Bitcoin is, again, several thousand times safer than Ethereum because it is so much older chain and it has so much more hash power, right? So if you're going to move billions of dollars and tomorrow it may be trillions of dollars, how much security do you want? Well, I would tell you that if you're really comparing apples to apples, then you have to include the cost of running the U.S. military in this calculation. Why? Because the U.S. military is not protecting the United States of America. The U.S. military is protecting the U.S. dollar, the petrodollar, the dollar as the reserve currency of the world, right? And so when you think about the cost of running the network, then you should include all the protections, not just how much electricity does it cost to run JP Morgan or Citibank or whatever.
I also heard that you believe, back to the first mover advantage before with Uber, you said that you don't think in 20 years or so that Bitcoin will be the main currency. Do you still feel that way? And if so, how does that align with your bullishness on Bitcoin's price for the next couple of years?
So we already have over 200 blockchains, right? So it's not like Bitcoin is the only blockchain. And what I was saying is that I think the technology for the winning blockchain has not yet been invented. So, for example, there is definitely a scenario in which the Chinese government digital yuan becomes a reserve currency of the world. It's a digital currency. It runs on a version of a blockchain. and it wins away. It takes over and wins over all of the users that are using Bitcoin today, because the Chinese yuan is definitely going to be a great form of payment by definition, right? It's a fiat currency effectively, right? It just happens to run. It's a digital fiat currency that happens to run on a blockchain, right? So there's a scenario where the United States comes up with a digital currency, and nothing bad happens with MMT, and we start running, on the digital dollar in our wallets and use it as a form of payment, and that has a good chance of winning out against the Bitcoin as well, right? So there's a lot of variance in the future of what is the winning strategy, what is the winning combination. Now, Bitcoin is a phenomenal store of value, but it's still a horrible form of payment. Most people don't use Bitcoin for payment, and if you did use it for payment, you are super sorry about it, because that Tesla that you bought last year with Bitcoin, you look at it and you say to yourself, oh my God, if I just had the Bitcoin, I would have 10 times, I could buy 10 Teslas instead of one. So when the world's richest person tells you, I will swap you with my Tesla with your Bitcoin, you should think hard of who's going to have the winning hand at the end of that transaction, right? You're replacing an asset that appreciates in value with something that depreciates in value, which is the Tesla car.
It's funny you mentioned that. A friend of mine's a barber in Manhattan, and one of his clients insisted on paying with Bitcoin a few years ago. It's like $20 haircut, and he said, I looked at it recently, it's like $5,000. So it's a great trade for him. All right, so before I get to Celsius, I just got one more question, because I saw a video really early in the year where I think you said you were one of the few people who said, hey, we're going to have a huge dip in Bitcoin, maybe like 25,000 before we start going back up. And I think you said something over 100,000 by the end of the year. Do you still feel that way? Was that dip that we just had, do you think that was it? Or do you still think we're going back into the 20s before resuming the leg up?
Yeah, so we're doing this in May of 2021. So in January or February of 2021, I kept saying it's too much too fast. We're going to have to revisit the 25 to 30,000 price levels. And I had a lot of people on Twitter basically just try to rip me into shreds, right? They're like, why you dissing the market? Why are you saying bad things? Stop tweeting. Just keep your ideas to yourself. And it's not that I want it to be right. It's not like, oh, here I'm right and whatever. I feel that, people want to get rich quick, and they want that to happen super fast, and they don't understand the consequences, right? Because what happens is especially when you're on leverage, or when you have borrowed funds, and you don't sell, right? You don't take anything off the table, you end up getting wrecked. And the problem we had here is that last week, when Bitcoin was down 53% top to bottom in just a few days, over 10 million people got wrecked, right? Completely got liquidated on all the different platforms. So that's just not good for crypto. So when I'm saying let's bring 100 million people into crypto, we just lost 10 million people. In 1 week, we lost 10 million people that were super hot and excited about Bitcoin, and now they're just sitting, looking at themselves in the mirror saying, oh, I'm never touching this thing again. I lost all my money in this trade. So
they may never come back because they got burned so bad.
Exactly. So that's not a good thing for crypto. It's not a good thing for any of these people. So what do we get, right? So I think slow and steady here wins much better than fast up and down and flash crashes and recycling a lot of people. So I do think that I still think we're going to be over 100,000 this year during 2021, but I do think we will have another correction after this one as well, and we'll end up the year with less than $100,000. So I know a lot of people are not happy about this view, but I'm sticking with it. I'm not changing it.
I tend to agree. There's a lot of different models out there. Some people think you'll overshoot 100 and go way higher, but it always reverts back to the mean, I guess, a little bit on its continuance to go up. Okay, so I want to talk about Celsius because when I first came across Celsius, I was like, wow, this is amazing. I don't understand how more people don't know about it. Like I've been talking about it on my podcast last few episodes, and it's amazing that a lot of people don't know about it yet. So it shows you the potential for growth. For me, what's amazing is that everyone says, hey, crypto, Bitcoin, whatever, you can't really, there's no intrinsic value. It doesn't make money. But for people who are not familiar, you can put the crypto that you have into Celsius and earn a yield on it. So for example, right now, there's like a 6.2% yield on Bitcoin, and it varies based on the cryptocurrency. I wrote a blog post about how you can earn 1,000 times the interest that you get at the bank, Chase Bank, Citibank, by putting your money into a stable coin and putting it into Celsius. So that got a lot of people's attention, and that's why I wanted to talk to you. How would you describe to people who are skeptical? Because everyone's like, wait, how's that even possible? Why is the bank giving me 0.01% and Celsius can give me 10% or 6% or 5%?
Right.
How does that make sense?
Well, it doesn't make sense. So for most people, when the bank tells you that the rate is 0.1%, you see it, one bank, second bank, third bank, the fourth bank is 0.15%. You say to yourself, okay, well, that is the rate, right? If all the banks, and these are all big banks, they have big offices, big buildings, beautiful, lobbies. You're saying to yourself, they know what they're doing. They're pros. So if they say the rate is 0.1%, that must be true, right? So if you look at the rate the banks have been paying over the last decade or two, you will see that the rate has come down every year, and it actually come down directly in correlation to them buying other banks, right? So they consolidated the banking world. There's the fourth largest bank in the United States have something like 60% of all the deposits, right? Bank of America, JP Morgan, Chase, Wells Fargo, and which one am I missing? Citibank, right?
Citibank,
yep. So those are the largest banks, and what you have to ask yourself is not what they're paying you. You have to ask yourself, what are they paying themselves, right? So they're all public companies, and they all brag about their earnings to their shareholders. So if you, instead of looking on their website at what they're telling you should be earning, go on the SEC filing, go and do a search for JP Morgan Chase quarterly earnings and see how much money they're giving their shareholders. And you will find out that they're making between 15 and 17% return on capital, meaning yield on their capital, right? They're paying that to their shareholders, either in the form of a dividend or a stock buyback or a bonus to their employees or anything like that, right? So if they can pay themselves 17%, right? Wouldn't it be fair if they paid themselves 10% and gave you 5 or 6%, right? Let's split the pie. Should everything go to the shareholders, or should we split some to go to the depositors and some to go to the shareholders? So when I say these things, people look at me and say, Alex, come on. I mean, the Fed has low rates to zero. So banks are making no money. No, banks make more money than ever before. The banks have never made more money than they make now. So the rate the Fed pays, or the rate the Fed dictates, has nothing to do with what they can pay you. I'll give you a simple example. Back 10 years ago, when the Fed rate was 4 or 5%, bank charged you 24% on your credit card. Now the Fed charges banks 0, right? They lowered the rate from 4 to 5% to 0. So now their cost of capital went down by 5%. Did your credit card go down from 24% to 19%? So you have to understand that while the Fed is lowering the cost of capital for banks, banks continue to charge you an ATM fee and a withdrawal fee and an inactivity fee and an overdraft fee. You name it, a fee upon fee, right? They're pros at charging fees. So all that money, and none of it is directed towards the depositor, right? Why? Because they are so dominant that they don't have to pay. What are you going to do? If you try to go into your bank account and to your bank and demand to know what is the bank doing with your money, who are they lending it to, what is the interest rate, and how much of it you're getting, right? Just they're going to laugh at you and throw you out of the bank and close down your bank account because they don't need you as a customer. But those are all the things that Celsius shares with its customers every week. Every week, we tell all of our customers how much we received in deposits from the community, what did we lend out, how much did we earn, and we give 80% of that back to our community, to the depositors. 80% of it goes back to the depositors. So in 700 years of banking, since the Medicis started banking in Italy, in 700 years, there's never been a crazy banker, not even one crazy person, who thought that they should give their customers 80% of what they make, right? After all, traditional banks keep 90 to 95% of what they make. They give their customers a fraction of 1%, right? So that is what's so hard for people to understand, because you were conditioned over many years to not earn anything on your money. People assume that that is just how it's supposed to be. But rich people, right? And I'm one of those rich people. If I go and I give my money to Goldman Sachs and I give them $100 million, the agreement between me and Goldman Sachs is that I'm the LP, the limited partner, and they're the GP, the general partner. And I get to keep 80% of what they make. That is the agreement between very rich people and the banks, very rich people and their money managers. So all Celsius did is took what the very, very rich people already have and gave it to a person that has $100 and said to him, look, we're going to treat you as if you have $100 million, even though you only have $100. And I'm the largest user of Celsius. I have over $350 million of my own money in Celsius. In percentage terms, I earn exactly the same thing as somebody who just joined Celsius and put $100 to work. If I earn 10% on stable coins, you will also earn 10% on stable coins. If I earn 6.2% on my Bitcoin, you will also earn 6.2% on the Bitcoin. And that's what has never been done before.
That's why the banks hate you, but you're loved by the people. So I guess you're doing something right. It's hard to wrap your brain around it, because in an inflationary system where the value of the money is decreasing and there's more money being out there, you would think the yield should be higher versus a deflationary system like Bitcoin where it's a fixed supply, the rate's higher. But I think you explained it well. The other hiccup I hear from people when I tell them about Celsius is like, well, my bank has FDIC insurance, right? So I'd like to hear what your response to stuff like this is. But for me, it's like I try to explain, maybe you'll go into this because you can explain it better than me, the fractional reserve versus the collateralized system. Yeah, they have FDIC insurance, but they only have a tiny portion of the money they are lending out or the money they're collecting from people. So in a way, it's a little bit more risky, especially if you have more capital than that FDIC bar. So I'd like to hear how you respond to that that barrier that people have.
So again, look, Celsius is not trying to be a federally chartered bank. I mean, our job is not to banks take tremendous risk, right? So most banks are leveraged 10, 20, 30 to 1, meaning for every dollar they have in deposit, they do $30 worth of lending. Celsius only does what's called asset-backed lending, ABS, right? So if we have $1 in deposit, we can only lend 50 cents on the dollar, right? So we are a much safer lending institutions than traditional banks. Now, most people say, what are you talking about? Banks, that word starts with a B. Banks are very safe. Well, if they're so safe, why do we have to bail them out every 10 to 15 years? They're safe. You can look at the last 100 years, this whole century, last 100 years, and you will see that every 10 to 15 years we had a crisis, and every 10 to 15 years we had a bailout. And guess who paid every bailout in the history of the United States? The taxpayer, right? So the issue, it wasn't the FDIC. Show me one time, 2008, did the FDIC come and say, okay, Bank of America is in trouble, Merrill Lynch is in trouble, Goldman Sachs is in trouble, Morgan Stanley is in trouble. I am the FDIC. I'm going to bail out all these guys. No, we created TARP. We went to the taxpayer and said, please give us $800 billion because the FDIC cannot bail even one bank. Forget about all the banks that are in trouble. So for all the people who think that there is insurance because when they go to the bank branch, there's a big label on the door. As you walk in, as you pull that heavy door, there's a big label that says FDIC, right? Wow, I feel so safe. Now, what's the value of an insurance policy that has never paid out? The FDIC has never paid out for any bank failure. When Bear Stearns, which was the first bank to collapse in 2008, had trouble, did the FDIC jump in and say, okay, we're here, it's good to go? No, they took it and they forced JP Morgan to buy Bear Stearns, right? The next bank that collapsed, they forced the next bank to buy the next bank, and so on and so on. So they didn't cough up any cash. They don't have it, right? So you can continue fooling yourself that yes, it's safe, and it's the same thing like talking about your mother's retirement plan, right? The pension plan. So unfortunately, again, we printed so much money just this year in 2021. We printed close to 40% of all the money that ever existed, right? Between the Fed and the government and everything else. So that's 40% inflation in monetary terms in 1 year. And the government is telling you that there's 2% inflation, right? So we can continue lying to ourselves, or we can look at the facts. Everything I told you, you can go and Google and check for yourself and come to your own conclusions. But what's important is that you have a plan. You have a plan that acts in your best interest, not in the government's best interest, not in the Fed's best interest, not in the bank's best interest. Because all the plans these people are giving you are in their own best interest. Now, your plan should be what is the best store of value? How can I protect my asset, not my dollars? You want to protect your asset, the value you created. You exchange your time for value, and now you want to store that value in a way that will protect itself and will accumulate more value, more wealth, right? So how do you protect the wealth that you worked so hard for? Because if you keep it in dollars, it's just going to continuously lose its value.
It's funny, when I was requesting questions from people like about a week or so ago, someone said, hey, why don't you ask Alex, how would Celsius react or do if Bitcoin went down 50% in a month? And I'm like, I went back to him like, oh, look, it happened in a week and they're still standing strong. So I think that goes to what you were just talking about, the collateralization and how it's not as risky as the current system that we're in. So, but I do want to touch on,
comment, because this is public record. So last week, we had our best week ever, meaning we made the most money last week in the history of the company. We had 0 institutional liquidations, so people we lent money to, all of them had margin calls and so on. They all gave us additional collateral. We borrow money from other people, so we had 0 liquidations, meaning we did not get liquidated because we had to give more collateral to other people, right? Everything goes in a circle. And we had 1 liquidation on DeFi, which we bought back at a loss of something like $10,000, right? So the entire outcome of all of this was that we made millions of dollars and we lost something like $10,000. That was the test, the stress test that Celsius went through, right? Now, let's take any of the banks. And you pick any bank you want. Let's go and reduce the value of their assets by 50% and see what happens. I guarantee you what's going to happen. They will all have to come to the taxpayers and say, can you bail us out one more time? That's the only thing that's going to happen. They cannot survive. When you look at the stress test, just do a Google test of the stress test on the banking system and see what is the stress test. Down 10%, down 20%. There's no scenario of down 50%. They don't even test for that.
I can testify to that. I used to work in the financial world as a credit analyst. So they evaluate the credit risk, and they're definitely not ready for a 50% drawdown. And I think someone who runs Celsius like you, who's prepared and expects a big pullback, I think I'd rather put my money there because unlike everybody else that says, hey, we're going to the moon, you're actually preparing yourself for the inevitable pullbacks. So one other thing I wanted to touch on, I know we're coming up at the end of our time, that I think is a big benefit to Celsius that I'd like you to touch on is the rich people have assets that go up in value, and they're able to leverage it and borrow against it without selling and having to pay tax, right? And as the value keeps going up, they're able to leverage it again. So I'd like to have you just touch on that briefly before we go. People are able to do that with Celsius with their crypto. They don't have to sell it. There's 1% loans that they can use to take money out of it without having to pay a tax on a sale.
Sure, and again, our previous president obviously used this. He was bragging how he only pays $700 a year in taxes, even though he's a billionaire. So these are legal ways. This is not like some scam or some hidden, unknown tax loophole. That's just the law. What we're talking about right now is what the law is. The law applies to the rich and the poor. It's just that the rich use it every week, every month, and the poor never use it once, right? So if you barely make enough money to make a living, and you pay full tax on it, right? You don't have savings, you don't have assets, and because of that, you're really living off the work that you do every day, and you pay full tax. You pay whatever 30, 40, 50%, depending which state you're in. But if you are very, very rich, and you own buildings or you own any kind of other asset, the value of that asset in dollar terms increases, or you're collecting rent or other type of dividend income. And what happens is that you can borrow against these assets. So just like you can borrow against Bitcoin or your stock, you can borrow against buildings, you can borrow against other assets. And when you take a loan against the asset, that is not considered a sale. It's not like similar to how you pay taxes when you get a pay for work that you've done. And because of that, you can effectively defer taxes on the increase in value. So if your building is worth twice as much, or your Bitcoin is worth twice as much, you're not paying taxes on that appreciation until you actually sell it, meaning you can hold it forever. But at the same time, through, for example, Celsius, you can come, take a loan, $1 loan, pay off your credit card bills, pay off your mortgage, while your Bitcoin and other assets continue to appreciate, continue to earn interest. So that is again, it's not a loophole. That is how rich people stay rich. That's how rich people defer taxes. That's how rich people avoid paying all their money back to the government. So all of us can use it, and it's just a question of, first you have to save, you have to hodl, you have to accumulate assets. That's the first step. You cannot do any of these things if you haven't accumulated anything. After you accumulate these assets, you can then, again, have them earn interest, right? That's what Celsius does. It pays you interest on 45 different assets. And if you need a loan, you can take a loan and use that to pay your bills, spend money, go on a fancy trip, pay off your credit cards and everything else.
The recipe for wealth. I think it's basically the magic of Celsius that you're bringing all these benefits that the wealthy had to regular people. That's why I feel so passionately about getting the word out. Alex, as I expected, I did not get to all my questions, but it was a great conversation. I appreciate your time. I know by the time this gets published, another benefit of Celsius is that you guys periodically have promo codes. So there will be promo codes coming out, I think, later this week, and I'll have it in the show notes, everybody. And that's a way to earn even more yield by meeting the metrics of these codes. Where you put in a certain amount of money, Celsius gives you even more money on top of the interest that you'd be earning. So all that stuff will be in the show notes. Hopefully, I help put a dent into that 100 million number with this episode. And Alex, just thank you so much again. Any parting words, anything you want to point people to, let us know.
Sure. So thanks again for inviting me, and I hope this content will help educate people and have them feel more confident about doing what's in their own best interest. You can follow me on Twitter at Mashinsky, my last name. Celsius.network is our website. We have over 1,000 videos on YouTube. So if you go there and search for Celsius Network, sign up to our channel, subscribe, and hit the bell button so you can get notifications. We post videos every day. And, we're going to be in the Miami Bitcoin 21 conference. If you go into Miami, you can meet us in person there. And otherwise, I'm based here in New York, and this is where Celsius was born. So we're very proud of it, and would love to meet you all in person. And again, take Bitcoin to the moon, right? That's what we're trying to do.
All right, awesome place to leave it, Alex. Thanks again so much. I really appreciate it. All the links to everything you mentioned I'll have in the show notes, everybody. Thank you so much, Alex. And there you have it. I strongly suggest you sign up for Celsius. I've actually gotten all my friends and family on it recently. As of this recording, you get 6.2% interest on your Bitcoin, 5% on your Ethereum, 8.88% on your US dollar stablecoins. So whether you own and believe in crypto or you're still loyal to cash, you can still benefit from having a Celsius account. One of my favorite things is that interest payouts are made weekly on Mondays. So if you have a job and you're used to getting paid on Friday, now you'd have 2 paydays a week. On top of the interest, if you sign up via my link, you'll receive $40 in free Bitcoin. Another reason I love Celsius is that they also provide promo codes that give you bonuses for transferring in funds. For example, right now if you transfer in $400 worth of anything, you get an additional $50 in Bitcoin on top of the $40 you get for using my link and on top of the amazing interest. If you transfer in $25,000, you get $600 in free Bitcoin and so on. Make sure you input the promo codes before you transfer in any money. And if you need any help, feel free to DM me on Instagram and I'd be happy to help you get set up. I will list the current promo codes in the show notes, but please note that by the time you listen to this, these may be outdated and there may be new promo codes. So just in case, I'll also include a link to Celsius' site with the current active codes. Final note, I've started to record interviews on video and I'm experimenting with TikTok and YouTube. If you're on any of those platforms, please help me out by giving me a follow and engaging with and sharing my content. It is really appreciated. I hope you got a ton of value out of this conversation. If you enjoyed the episode, please remember to subscribe and leave a review. For any and all resources that we discussed, check out the show notes or head on over to boundtobyrich.com. Until next time.